Back with us here on Chartbusters, continuing with our coverage from the Reliance Industries AGM on Thursday. Now, Jal Irani, the Executive Director at Nuvama Institutional Equities, is joining in to discuss the key takeaways from that. Jal, good morning. Thank you so much for joining in. What do you make of the slew of announcements that were made yesterday by Mukesh Ambani when it comes to new energy or the O2C business, the prospects that they've laid out for the new energy business? What do you make of those announcements?
So I think the market has been seeking clarity, especially on the new energy business, and certainly this AGM provided a good direction towards that. I think the most important statement that the chairman made is that the new energy business within 5 to 7 years could become as large and equal in terms of profitability to the O2C business, which is the cash cow oil to chemicals business, the refinery and petrochemicals business. Now, the magnitude of this is immense because this is the largest profit bucket on a attributable consolidated profit after tax. The O2C business contributes more than 50%, 50% of its bottom line. So if Reliance is going to replicate this within the next 5 to 7 years, not only is it going to be immense in terms of profits, but notably this business is also green and clean. So therefore, unlike petrochemicals and refining, which arguably gets not a fair or not a valuation as high as some of the other businesses, this shall get a valuation which will be significantly higher. Besides, also, notably, the new energy business is actually significantly linked to especially the O2C business, and will, as a result, the entire company will be net carbon neutral by 2035. So even their existing O2C business, which is the largest profit, will turn green, and there'll be a valuation re-rating there as well. So by far, I think this was the most significant announcement.
All right. Hi, Jal. Good morning and good to see you in. Nigel on this side. So you have spelled out, what impressed you and the way ahead as well. But can you quantify some of that? How do you see the business evolving? If you had to put a couple of numbers, what is it currently? And how do you see it evolve in the next 3-4 years on various verticals? That'll be helpful.
See, essentially, the chairman has quantified it for you. So that's actually the number. But if I mean, it's a new business globally. It's a EV moment to the world. And India has got the opportunity to actually be the Middle East in this business, one of the lowest cost and one of the largest in the world. And the way I look at it is Reliance is actually strategizing very wisely to be the Tesla of this industry. And this is something that they have over the last 5 to 6 years, very significantly put the pillars and the building blocks in place. They bought out about a dozen leading technologies and key players across the world. And that is beginning to actually now translate into actual capacities. The first, which the chairman specifically said, is going to be the 10 gigawatt PV module facility starting by the end of this year. Now, for that itself, they had bought out a company called REC, which is a leading technology company in the space in the world. And Reliance will be commissioning the HJT technology, which even the Chinese are barely beginning to roll out. And a small portion of the Chinese are beginning to roll out. So Reliance will be cutting edge technology. And to put 10 gigawatts into perspective, while India's current module capacity is about 50 gigawatts, production is only about half of that. And this 10 gigawatt, when it's get commissioned in true Reliance style, they will ramp up very quickly to full utilization. And not only that, the efficiency of these modules will be amongst the highest in the world at 26%. The efficiency of most modules at the moment is 20% or potentially even less. So therefore, by far, so this is the first thing one one can expect. And shortly after that, they'll be commissioning multi-gigawatt size electrolyzers, which will be using the solar power energy that they produce to convert into green hydrogen, and simultaneously setting up 30 gigawatts of battery facilities by, I mean, all this is by next year and the years that follows, 25 and 26. Now, 30 gigawatts is completely off the graph. And it is all this is very essential to provide round-the-clock power. So not only the cost is going to be very significantly lower, but also they'll get round-the-clock power. And as the chairman actually highlighted, they've also got the land and the port facilities to become an exporter of green ammonia eventually. So that land being a very critical part which has also been allocated, including the Deen Dayal land port facility for exports, basically. So these are some of the broad timelines that one would be looking at in the space.
You know, Jal, there were some targets that were laid out for both Jio and for the retail business for doubling their revenue and EBITDA over the next 3 to 4 years. Do you see that as achievable considering the way both the businesses are growing and at the pace at which they are growing, or do you see that happening much before the 3 to 4 year timeline that has been set out?
Well, essentially, these businesses are no longer in the early stage anymore. Investments are in place, and now they're in a phase of operational leverage. So essentially, what happens with every unit of volume increase, you get a margin increase as well, because your fixed costs are not going to increase at the same pace. So therefore, the profit growth is potentially going to be higher than top line growth, and top line itself is growing significantly into double digits, mid-teens at least. I mean, and with for example, in Jio itself, the tariff hike which has been taken at the moment significantly flows through the to the bottom line. So they should achieve fairly strong growth in those areas as well.
All right, Jal, we leave it at that. Thank you so much for joining in and sharing with us your thoughts on the Reliance Industries AGM and the targets that the company has laid out going forward. Jal Irani there of Nuvama Institutional Equities. Incidentally, Nuvama has also laid out its highest price target on the street for Reliance Industries, which is at 37.86. The stock currently 0.5% low, but continues to remain above the mark of 3,000. Take a short